Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 23rd, 2025, and we're diving into IBM's second quarter earnings report for 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. IBM has released a robust set of results for Q2 2025, showcasing strong revenue growth and margin expansion, particularly in their software and infrastructure segments. I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. IBM reported a revenue of $17 billion for the second quarter, which is an 8% increase year over year. John, can you elaborate on the key drivers behind this growth?
Absolutely. The growth was primarily driven by a 10% increase in software revenue and a 14% rise in infrastructure revenue. The software segment, particularly hybrid cloud and automation, saw significant gains, while the infrastructure segment benefited from strong performance in IBM Z and hybrid infrastructure.
And how did IBM perform in terms of profitability?
IBM's adjusted earnings per share came in at 280 cents, beating the forecast of 264 from 7 analysts. This was supported by a gross profit margin expansion to 60.1% on a non-GAAP basis, reflecting operational efficiencies and a favorable portfolio mix.
Operational efficiencies and future outlook. IBM has shown impressive operational efficiencies this quarter. Can you tell us more about their margin expansion and cash flow performance?
IBM's gross profit margin improved by 230 basis points to 60.1% on a non-GAAP basis, driven by revenue growth and productivity initiatives. They generated $2.8 billion in free cash flow, up $0.2 billion year over year, and have raised their full-year free cash flow outlook to exceed $13.5 billion.
That's quite promising. What about their shareholder returns?
IBM declared a quarterly dividend of $1.68 per share, continuing their long-standing tradition of returning value to shareholders. This reflects their strong cash flow generation and commitment to shareholder returns.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did IBM's different business units fare this quarter?
The software segment led the charge with $7.4 billion in revenue, up 10%. The consulting segment saw a modest 3% increase to $5.3 billion, while infrastructure revenue surged 14% to $4 billion. Notably, their generative AI business has grown to $7.5 billion, highlighting IBM's strategic focus on AI and cloud solutions.
It seems like IBM is making significant strides in AI. How does this position them for the future?
IBM's focus on AI, particularly generative AI, positions them well to capitalize on the growing demand for AI-driven solutions. Their deep innovation and domain expertise are key differentiators in helping clients deploy and scale AI, which should drive future growth.
Risks and challenges. While IBM's performance is strong, what are some of the risks and challenges they face?
IBM's debt has increased to $64.2 billion, which is a concern, although they have a solid cash position. Currency fluctuations are expected to provide a 1.5% tailwind for the year, but economic uncertainty and competitive pressure remain challenges. IBM needs to continue innovating and managing costs effectively to maintain their competitive edge.
How should investors view these risks?
Investors should keep an eye on IBM's debt levels and their ability to manage economic headwinds. However, their strong cash flow and strategic focus on AI and cloud solutions provide a solid foundation for long-term growth.
Key takeaways. In summary, IBM has delivered a strong performance in Q2 2025, with impressive revenue growth, margin expansion, and a positive outlook for free cash flow. John, any final thoughts on IBM's investment prospects?
IBM's strategic focus on AI and cloud, coupled with their operational efficiencies, positions them well for future growth. While there are risks, their strong cash flow and commitment to shareholder returns make them an attractive investment.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on IBM's performance in the comments below.